With mortgage rates still hovering in the low to mid sixes, you might have thought that the worst is behind us. Well, in today's video, I want to talk about some of these fee changes that you may have seen headlines about, get to the bottom of what the impact of those is going to be so that you are fully prepared. As a real estate agent, one of the biggest challenges that I face is helping buyers find the best possible rate out there with different lenders. Now, there are a lot of different ways that we can have this conversation, but I really want to focus again on who's going to be impacted and how they're going to be impacted. So there are two changes coming up, with the first being effective May 1st. Actually, the second change was also supposed to be effective May 1st, but there was a lot of industry pushback that has now pushed that effective date back to August. Now, the one coming in May is pretty straightforward. So there was a time where those with lower credit limits and credit scores, I should say, were penalized based on what they call loan level pricing adjustments. This is a big matrix of fees that lenders charge. You'll simply see it as a closing cost at the closing table. That can range, and it depends not only on your credit score, but also about the percent you put down. So I can't, in this video, give you a hard and fast, here's the different ways that this is exactly going to impact you. But the big kicker here is that is great. Those fees are actually going to go down for those under a 660 credit score, which is good news, right? Anybody who may not have the best credit history, it'll make buying a home slightly more affordable. But on the other end of the spectrum, that's effectively being subsidized by those who have a great credit score above 740. So those fee changes are going to be impactful. And again, I don't want to say that the lower income, lower credit score buyers should not have an easier time buying a home. But those of you who are going to be purchasing a home and have worked hard to keep your credit scores high are effectively going to be penalized. It's going to be a small penalty, basically 0.125% of the loan value, not massive, but bigger thing here that I want to drive home is this only impacts conventional loans. So if you are going through this process, depending on the home you're buying, if your loan amount exceeds $727,000 roughly, you would be likely qualifying for a jumbo loan. Jumbo loans are not guaranteed by the government, by Fannie Mae, Freddie Mac. This fee only applies to loans that are being guaranteed by those two entities. So if your loan amount is below $727,000, you will have an additional fee on the closing sheet effective May 1st if you have a good credit score. If you do not, you may actually see a lower fee on that closing statement. So that's change number one that's coming. Change number two is a little bit more impactful, which is why it's been delayed. This has a lot to do with debt to income ratio more than anything else, and also the loan to value ratio. In simple terms, debt to income is just what it sounds like, the amount of debt you have relative to your income. Whereas the loan to value ratio, basically how much money did you put down on the home? If you're putting 20% down, it's historically pretty good. But if you are putting less than 40% down, is the stat that's out there at the moment, there is likely to be a change that is going to not be a good one for you. There's going to be an increase to that loan level pricing adjustment. So there's still more detail to come on that, but it's important to know that, again, in this environment where buyers don't really need more headwinds or more worry or more fear, there keeps finding ways to add that to the picture, which is not great. So that's what I wanted to cover with you today. If you want to know more about this, I would love to connect you with one of the local lending partners who know this better in their sleep than I do while I'm awake, because it's what they do. So if you want to talk more about this, if you have a lender, ask them. But if you don't, or you simply want to talk to somebody local, I would be happy to connect you. So that's it for today. I appreciate you hanging out with me as always. I'll see you on the next video.